Welcome to Coachable Wealth, where we blend the worlds of sports and finance to bring you strategies as you navigate your wealth building journey. John, Cody, and Sean are here to help you elevate your financial advisor relationship to meet your long-term goals. Now let's get to it.
Welcome back, everybody. It's been, a month or two since we last got together, I believe, here, huddled together and talked about sports and finance.
Yeah, it's been a while.
How's everyone's weekend? We're coming off a nice little early summer heat wave.
Yeah, it's been crazy hot. The last 2 weeks? I think it's been above 90 almost every single day, which is unusual for Pennsylvania. It was good though. Went on some walks over the weekend with the dogs, and then pretty much just stayed inside the rest of the time. Unless I was by water, I did not really want to be outside.
I actually saw it was hotter here in the Northeast than it was in like the Southeast, in Florida and Georgia and the Carolinas.
I'm not surprised.
Toasted at a Phillies game this weekend. So we were down the third base line, sitting in the shade and looking at everybody on the first base line and in the outfield just looked like they were just burning in the sun. And the shade didn't help at all, but the Phillies putting up 12 runs did help.
Yeah, that was a really good game for the Phillies offense on Saturday.
Yeah, Wheeler looked really good too.
Yeah, the Phillies, I think they have the top 3 ERAs in the NL so far. I think Rangers number 1, and now Chris Sanchez is number 2, and then Wheeler's number 3.
I saw that. Just like Wheeler, I mean, going out there on the mound in that heat, it's got to be draining.
Oh, yeah.
Mental and physically. I mean, just make it through that.
I guess it helped since the Phillies offense scored so many runs. He probably got a decent break in between because he was going like 1, 2, 3 every inning. So he probably wasn't pitching that long. And then the Phillies offense was going off.
No, the first couple of innings, his pitch count was super low.
Yeah. I was getting nervous, though, watching Friday night's game. I was getting flashbacks from the NLCS when the Phillies get all these base runners and they can't score. I was getting nightmares about that.
I didn't watch any of the game on Friday since it was on Apple TV. I don't have Apple TV.
So I did get to go down into the infield for a concert after the game. It's the first time I was in that infield since I ran the bases as a kid one night, probably 20 years ago.
How was the Riley Green concert? Was it worthwhile?
It was great. If you want to talk about a good investment. So my buddy and I, who are big Riley Green and Phil's fans, bought these tickets before the season started. And they were $80 for game tickets and on the field passes for the concert. I know the Phillies started getting hotter. Prices of those just took off. So we were actually joking on the field that our only regret was we didn't buy more and start selling
them. That's funny. Yeah, it's definitely been a great start to the year for the Phillies. I don't even think maybe our last podcast was like the first week of the Phillies season. So it's been a long while since we've done one, but they are off to one of the best starts in history for the club. I know that they have the highest win percentage in MLB right now.
Yeah, it's going to be interesting. I think it's 2-3 weeks out yet when some free agency trades can start, but I have a hunch that Dombrowski's probably going to make a trade, probably maybe a reliever and an outfielder. I would think.
Yeah, get some more depth there.
Yeah.
Yeah, it'll be interesting to see what the Phillies do at the trade deadline. It's also been a good couple months for the stock market too.
Bro, how about anybody watch any golf? See Scotty Scheffler win another one?
I did.
PGA event?
I did. He is just on a roll. So he's the first golfer to win 6 tournaments before July since Jack Nicklaus did it in like 1960 something.
Part of me thinks though 22 under, I think they got to toughen up the course a little bit.
I was listening to the broadcast. The broadcast was joking around that they had to make this course a little easier because the last 2 have been so tough with the U.S. Open, and then the Memorial was last weekend, I think.
Yeah, that was a week before.
Oh, yeah, last weekend. Well, the weekend prior was the U.S. Open, and the Memorial was before that. But yeah, they struggled for the last couple of weeks, so let's give them an easier course.
I was just looking at some Scotty Scheffler earnings stats right now, and basically, year to date in his total career, he's made just a tad over $91 million.
Yeah, it's crazy. I think he's made $28 million so far this year alone.
Jeez, that's crazy.
I mean, he realistically could make over 60, 70 million just from golf this year. Because now the FedEx Cup, if you win that, and he's up by an insane amount, you get a $25 million payout, plus obviously all the earnings from the golf tournaments. He probably will get over $60-70 million just from golf earnings this year.
Yeah.
Yeah, I mean, it's been definitely a great year for him in the golf game, that's for sure.
I was just looking at some of the breakdown of the individual tournaments here. Like you said, Cody, Travelers yesterday, 3.6 million. He won the Memorial 2-3 weeks ago, 4 million. So yeah, he's hitting all these
Yeah, he's hitting all the signature events.
signature events. Wow.
Yeah. How much did he get for the Masters?
3.6.
That's crazy. He got more from the signature events than the Masters.
Yeah. So he tied for 41st in the US Open 2 weeks ago, and his payout was $72,305.
That's crazy. Anything been top of mind for you guys on the financial side, whether it's conversations you've had with clients or John, anything on the planning side that has piqued your interest over the last couple months?
I think on the planning side, once we have the plans built out, just continuing those discussions with the clients that, hey, this is a real live document, and then we should talk about it annually or fluidly just throughout the year, make updates as needed. And then once that plan or that baseline is set, if the clients have any questions or any big purchases they want to make, we can build out a scenario and just kind of lay it over that plan.
I think that's a good point to bring up, especially as more people get closer to retirement. It's obviously very important to work with a financial advisor, building out those scenarios and then building out some stress scenarios too, because obviously the stock market's been on a great run since we had the off year in 2022. 2023 was a great year so far. This year it's been a great year with the S&P up 15% so far this year. So it's always good to go back to your financial plan and build out, those scenarios and those stress tests too.
Yeah. And I would say some of the stress tests that we've had discussions about, maybe it's about buying a second home or downsizing my current primary residence, or, hey, can I spend more in retirement? Items like that, or like Cody said, it could be some market conditions, looking at those too.
Yeah. Especially since we're in the summer now, going into vacation season, making sure that as we talk to our clients that they know we have these expenses built in, so they have the flexibility to go on the trips that they want. Because as everybody knows, inflation's still above the 2% target that the Fed wants, so everything is still expensive to do. The vacations, even just shopping is still expensive.
Even though inflation, as you just said, Cody, it is ticking down slowly over the months and I guess the last year. It's starting to get down a tad, but the consumers they're still buying, they're still traveling. It doesn't seem like there's a whole lot of stuff outside of the norm that they're not doing.
Yeah. I mean, I think that's why inflation's still above the 2% target. So if we look back over the last year, so last year in June, the 10-year treasury was at 3.7%. Now we're back above 4.25%. Even with the 10-year treasury going up 0.5%, you actually have had a positive return on fixed income. And that's why it's so important to put that money to work, because you're getting the good dividends yield now, and potentially when the Fed does cut interest rates, which obviously is a big discussion if they're even going to cut this year because inflation's above the 2% target, you'll also potentially see some bump up in principal.
Have you guys had any clients call in and still, asking about tech stocks and in particular NVIDIA and how they're now, the largest company? Do you have clients asking, what's my exposure? Should I have more exposure? Is it too risky? And how have you been handling those conversations?
We definitely have had some clients call in and ask about buying some NVIDIA. And I think that's important, first off, to always make sure that your financial advisor is accessible. So when you have those questions, you can go to them and ask those questions, whether it's buying it as an individual position or breaking down the funds you hold. So I think that's what we've been going back to our clients. If inside of our US large cap position, NVIDIA is the second largest position. So they already have a very large position inside of their portfolio, but making sure that you talk them through that, because obviously NVIDIA has been the hot stock over the last 10, 15 years, especially the last couple of years. But that is the second largest position inside of our largest fund that we have on the equity side. So I think that's always important to reach out to your advisor and talk about what's my exposure, and then talk about the potential downside if it does have a sell-off, just because it's been so good.
I saw a stat, I believe, last week, and it was kind of around Sean's point, just about the high concentration, like a NVIDIA or Apple or Microsoft, kind of all the big guys out there. But specifically NVIDIA, it was either 2010 or 2011. If you invested $1,000 to, I think, whatever the specific date was last week, it would have been like 240 some $1,000 gain on that position. That's, I mean, just that growth in that 10, 12 year period is just astronomical.
I did see, and I'm not sure how true this is, so take this with a grain of salt, that NVIDIA is having problems with some of their senior engineers leaving now because when they started, they got so many stock options. And since the stock is up so much, they thought those stock options were going to turn into a couple 100,000, but now they're close to like $10 million. I saw a couple of people were pointing that out as a potential problem that NVIDIA could have is a lot of their senior executives or senior engineers are potentially retiring because NVIDIA has done so well.
It's a great problem to have from an employee standpoint, but from an
Yeah,
employer
exactly.
standpoint, that's
Yeah.
that's tough.
Google went through something similar like a couple years ago, and they kind of had their rocket trajectory upwards. That they had trouble keeping a lot of their senior staffers too. I think because of a similar problem.
It will be interesting to see if that actually comes out to be a problem. Because I mean, I'm sure if NVIDIA wanted to say these senior engineers leave, I'm sure if they wanted to get other good senior engineers from some other companies, they would have no problem getting them.
It sounds like too. I mean, just like on the tech side and specifically on the AI side, that we're just starting to scratch the surface. Like we're
Yeah.
just the first or second inning of this of kind of what AI actually is and kind of what kind of impact it can have in the long run.
Yeah, it'll be interesting to see the impact that it has in all the different sectors going forward.
I was reading an article too. They're talking about how like AI is just really getting rolled out here in the states, in the United States, but it's just starting to get to some of the other nations internationally. So like that's going to be a huge tailwind on international emerging markets exposure in the long term too, I believe.
Yeah. Is there anything top of mind that you've been talking to clients about, whether it's, zooming out, looking at the longer term? I know there was an article here recently that came up that investing could or should feel boring.
I mean, most great things are just a bunch of small, boring acts, whether it be, like we went and watched the Phillies this weekend, and I'm sure it's pretty boring, the amount of swings that Bryce Harper does in BP, and it's not great. And he's breaking it down, but he's done it 10,000 times. Just like investing, it's just, especially for younger clients and people trying to build wealth, it's a very boring process, right? You're saving money. There's no fancy do this, do that. It's just a really, really simple, boring process. And I think it's the same once you get, closer to retirement, maybe just having a strategy and sticking to it and making adjustments along the way as needed, but it is not this big flashy thing that I think most people think it is.
That's a really good point, Sean. What you just having the investment strategy set and then sticking to that for the longer term. There's going to be tweaks that you're going to make, whether it's getting close to retirement, you reduce the stock exposure, or if we have a big downturn, you do some rebalancing, sell some of the bonds, go more into stocks to get back to your target allocation. But I think that's really important to stick to the strategy and make the adjustments as things change. Because, I mean, if you just focus on the last 2 months since we did our last podcast, think about all the news headlines that popped up. Whether it's, at the beginning of this year, the Fed was talking about cutting potentially 3 to 4 times. Well, we're at the end of June now, and the Fed hasn't cut a single time. And now they're talking about maybe not even cutting this year, but yet fixed income is still positive on the year. Stocks are still up almost 16%. So zooming out and looking at the longer term may be boring. Obviously, there's going to be a lot of stuff in the intermediate term or short term that's top of mind. But looking longer term, it could potentially be boring. And honestly, we don't want to be, trying to time the market. Sure, when there's a big swing up or down, you do some rebalancing, but we're not going to be like, oh, we think there's going to be a 5% sell off, so we're going to sell out of the stock market. Like those little sell offs are normal.
Yeah, I was also thinking too. I mean, we hear so much about asset allocation, but just kind of thinking about the financial planning part of it. I mean, obviously, asset allocation is super important, but also a lot of people don't think about like tax diversification. Say you work for 30 years and the only thing you contributed to is your 401k. So basically, you get to retirement and you need that savings. Every dollar you take out of that say, IRA, you have a pretty large tax implication on that. So that's kind of why the tax diversification is huge too in the planning. And I know as advisors, we talk about that a lot. You could be investing in a Roth IRA or a taxable bucket, and then all the different vehicles that we recommend in those different tax type accounts.
And the sooner you start, the more time you have for the compound interest to the upside.
Yep. What do they say? Compounding is what, the ninth wonder of the world or something like that?
Yeah. 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 Anything else top of mind for you guys recently? Whether it's on the investing side or planning side?
Well, we're wrapping up the second quarter here of 2024. I mean, it's kind of hard to believe that we're almost at the end of June and July 4th is next week already. It's kind of incredible. But we're getting into the second half of the year. I mean, we don't want to mention it, but we have to. I mean, upcoming election, as Cody and Sean mentioned, the interest rates, inflation, kind of there's a lot of, I guess, noise out there heading into the second half of the year here.
So there could potentially be a good amount of volatility in the shorter term in the second half of this year, as you were saying, John. With the election, obviously, is a huge impact inside of the U.S. Not saying it has a huge impact immediately on the stock market, but anytime you watch TV now, you see two political commercials every commercial break. So it's just going to continue to pick up over the next 4 or 5 months till the election, as you were saying too, John, with the interest rates, seeing what the inflation numbers are as we get closer. So it'll be interesting to see what the Fed does.
I see the interest rate front too, like in real estate. I think the 15 and the 30 year, Cody, you might have mentioned it. It finally dropped down below 7.
Yep.
For mortgages. But I saw the average fair market value of a property in the United States is at all-time high. I think it was like 419,000 they announced last year.
Yeah.
It's pretty incredible.
That is kind of crazy thing about just the average house inside the U.S. is now over $400,000.
Yeah.
Plus at a 6 to 7% mortgage rate. Got to feel bad for people trying to buy their first house.
Well, I think too, it's a lot just on the real estate. It's a lot of people looking for the same size house. You have a lot of people looking to downsize, and you have a lot of people looking to get their first or maybe their second, but it's like they want a family, so trying to get into that family starter home. They just don't make them anymore. It's like townhomes, apartment buildings, and 55 plus communities.
Yep.
And that's about it. There's really not many affordable single family houses in the world. And if you see a single family development being built, you probably see signs that says starting at 650,000. There's just a lot of people with the baby boomers, I think, downsizing, and our generation looking to start families. Everyone's competing for the same type of house, which they don't make anymore.
Yep. No, that's a very good point.
And if you read trends, people our age who maybe are putting off having kids, there's going to be just an abundance of vacant houses and apartment buildings because we're not having the kids. So there's a cliff coming. I mean, it's a long way off, but maybe 40 years, there's a visible cliff coming down the pipeline of impacts from people our age not having children.
Yeah. I was just going to say too, I know, Sean, you mentioned looking long-term on the real estate side, but like retirees, I mean, you always hear about, hey, we're looking to downsize, now we're empty nesters. Like, I think for retirees, yeah, they're downsizing maybe to less square footage, but realistically, their downsized house is probably an equal price or more to what they're downsizing to. It seems like.
Yeah, and they're potentially giving up, a 2 to 3% interest rate if they have a mortgage left to either pay in cash if you have the equity in your house, or getting a 6 to 7% rate. So I know that's why a lot of people aren't moving to.
Yeah, that's a good point. I think it's just to see how the quarter wraps up here, Q2 of 2024. I mean, it looks like it's probably gonna wrap up pretty strong, on the market side, but who knows what's going to happen here in the next couple of weeks or so.
Yep. I know there's important inflation numbers coming out on Friday, the core PCE and regular PCE, which is as the Fed says, that's the number that they pay the most attention to. The estimates are a 0% increase month over month, which would be great because the last reading we got was 0.3%. So if this drops all the way down to 0 month over month, and I think the yearly number they're looking at is like 2.6. So inching closer to their 2% target.
I was listening to a podcast last week, and they're talking. The next Fed meeting is July, I believe.
Yeah.
And there's a bunch of optimism that they might cut 0.25% in July, but they said realistically it'd just be window dressing at this point. It wouldn't be a huge impact if they did that.
Yeah. Yeah.
Just to calm everyone down and say, hey, we are in the right path.
Yeah. Not to talk about politics, but it's the first presidential election on Thursday, which I know a lot of people will be paying attention to. That's all I have to say about that.
It'll be interesting.
Yeah. Well, hopefully the Phillies continue to keep playing well into the summer season.
See you guys next time.
We hope you enjoyed this episode of Coachable Wealth, brought to you by Morton Brown Family Wealth, an SEC-registered investment advisor. This podcast is designed for educational and informational purposes and not intended as investment advice. More information can be found at www.mortonbrownfw.com.